What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. In this video today, we're going to be talking about Bitcoin. We're going to be talking about the risk markets, specifically through the macro, what specifically could potentially derail this current rally, as well as the technical levels you should be watching on the downside to know when the next major technical breakdown has occurred. We'll be looking also at overhead resistance. I hope you enjoyed this video. Get ready for a strong session as well as regular sessions. CTM is now returning to our regular YouTube uploads. Looking forward to helping everyone aim for the highest peaks to conquer the markets. I hope you enjoy this one. And if you do, please go ahead, support the channel. Make sure you subscribe. Make sure you smash the like button. Enjoy it. Here we go. Mic check, mic check. What's going on, everyone? So grateful, so happy to be back with all of you on this Monday. I hope you're all doing great. Really looking forward to getting back into the flow, finding the flow to being here with you all. We were traveling yesterday, 23 hours straight of traveling with two little kids by the time we arrived. Could you imagine? Got a really good restful night's sleep last night and couldn't be happier to be back with you all here this morning. Let's get into it. First of all, we had the most incredible time ever. Just a time full of grace. We were filled with joy, filled with love, and I hope over the next days, weeks, months, and year ahead to be able to share and bring that back to all of you. I feel like I am better prepared to lead CTM more than ever. As you all know, I am happier than ever with the direction that CTM has taken, where we are today, what we've accomplished. I've watched from afar. We were without Wi-Fi the whole time. I had very intermittent internet. It was very difficult. It was not my expectation, but it is what it was, and probably better off that way. But I saw what CTM was doing while I was away, and it was absolutely just beautiful to witness, to watch. I will be obviously spending today, tomorrow, and the rest of the week trying to take in and absorb what has happened ever since that CTM Summit Conference and everything that everyone has been working on. We get to do all of this in its proper time, allowing things to develop as they're meant to. There's no sense of urgency. There's no sense of rush, in so much as that we already have, let's call it, a perfect plan in place to be able to execute on. By the way, new Bitcoin buy signal triggering. And we see that the Ethereum trade, there's no way if I was trading that discretionary over the last 3 weeks that I would have held and stayed in that trade, and that continues to be something just showing again and affirming the power of CTM 2.0. And there's a lot to review, there's a lot to discuss, there's a lot to build on. The only sense of urgency there is that we need to continue to allow this big boulder to roll downhill. The momentum is there, but we don't want to, in any way, shape, or form, put in any obstacles that would derail or prevent that momentum to kind of wane. So I will be spending with a high degree of focus, making sure that I am able to not only catch up, but to contribute to everything that's being done in so many ways. All right, let's take a look and see what's going on. I could say now, ever since the work that we did together, that was after we had remember that weekend of that capitulation, the Celsius collapse, that forced selling that took place across the markets coming off of a month earlier, the Luna collapse and that forced selling. We were able to, by watching what was going on in the 10-year, by watching what was going on with oil and then other various commodities, most of them food related, be able to see in real time the turn that is taking place of what we could call perhaps or potentially peak inflation. And when we say that, we're talking about near term, or if we get, let's call it, let's say lucky, intermediate term. I personally, my expectations are that going forward, that we are going to see inflation not only sticky, but even higher than it is now. Now, the timing in between is everything. All right. And us to be able to catch what is a near term, intermediate term peak was really well done, because you all know, looking around, the vast majority of market participants continued to hold other views at that time. There was a lot of fear at that time. We saw from various fear indicators, but you all witnessed how we did it. You were all part of that, right? You all helped that happen. And here we are today. And we have this week a very big week, because we have the CPI print. CPI print on Wednesday. And what that means is, you know what? I think the greatest risk right now in the most immediate future is any type of very hot CPI print. That is something that I think could cause a breakdown of the current, let's call it, relief rally right now. And if it becomes something more, it becomes something more. But it's very fragile, right? We have seen in the past, ever since all this year, 2022, any type of rally that was able to take or get started has quickly been sold. And this one is obviously not immune. I think that most of expectations is that we're going to see this current rally sold. But as we've seen over the past 6 weeks, a lot of people who have held on to that bearish bias and have been continuing to sell into this rally of higher highs and higher lows continue to be punished. And bear markets have a really good, let's say, history of doing exactly that. And as people that are bearish on the market that continue to sell as they get more or less comfortable, right? And you should get comfortable after seeing, I'm looking at Bitcoin here, but I'm talking about the markets in general, right? You saw 2 massive leg downs in a row. That's coming off of, remember that March over here off the FOMC. I was looking for a rally. This rally, admittedly, was sold way quicker than I had imagined. We did a lot of great work over here in this point of March as preparing for, if this low was taken out, what would lie ahead. I think we called it something like, what happens if the stock market crashes, and why we used that low of March as the key for when that next big leg down would be prepared. I could have done a much better job personally of looking to sell the rip and catching a better entry. I'm talking about mostly equity markets over here. My bias got in the way. My bias was that this rally was going to extend out a little bit further and a little bit higher. And that's what we do, is we continue to look to improve self-improvement, our improvement of execution, our timing, and everything. And yes, we are working towards perfection in so much as that we are looking to conquer the markets. We are aiming for the highest peaks possible. One of the reasons I got into the markets when I did, what is it now? I mean, it's like 27 years ago. It still seems like yesterday, was because of the challenge it offered, the capital markets bringing the brightest talent from around the world, competing for one of the most important resources in the world, and that is capital, right? And why is that? Because that buys time, that buys the ability to make choices, right? And here we are today. So with that all being said, right, thank you very much. What a pleasure, what a joy to be back here with all of you. You are my family. I really, really missed you. I had every intention of I bought a microphone with me. I thought I was going to be recording regular or daily uploads for everyone. It's not what happened. That's okay. Here we are today. I think it's great, actually, to see over those couple of weeks, though, why I missed you. Why I continue to miss you, to see how CTM has evolved to such a point that you guys didn't need to wait for me and have continued to push forward and forward and forward. And it's a beautiful thing. It really is. Jamie, great to see you here this morning. Great to see everyone. All right, let me continue just going with what I have here prepared and want to share with you this morning. Everyone knows that I'm coming in pretty much blind, right? I did have my normal preparation before this live session today, but I've been removed from the markets largely compared to my normal routine. So with this in mind, let's continue moving forward. And And what I wanted to say is I can't wait to go back and read these comments and check in with all of you, and then go back and build off of anything that's being shared right now. But I want to make sure, as I am coming in cold, and so much, it's been 2 weeks since we've had any type of live sessions. I want to be able to carry and build the flow so that tomorrow's session could be even better. So this is coming off of what we're watching over here. We're watching this, which, by the way, is no longer a bear flag. You might have saw I tweeted out this morning, in so much that you're looking at the pole, the flag portion now being longer than the pole. And that just means it no longer technically classifies as a bear flag. However, we still want to watch what would be that support of the bear flag. I have it over here, the bottom line with the alert on it. The alert is on it because if that breaks, that's a big technical breakdown. Now, that could happen this week. We could see a very hot CPI reading that is going to signal to the market, coming off the back of whatever happened on Friday with the jobs report, that, you know what, the Fed has every ability, not that they don't, but the Fed has, this is what the market reaction will be, is that the Fed has every ability to continue to tighten. Now, that's not really true. The Fed, even if we're seeing the job market on the surface look like that, it's solid. Even if we're seeing inflation strong, giving every signal that the Fed continue hiking and being very hawkish, hiking hard. That's not necessarily true. That's a discussion for a later session. But what we're looking at over here is this area, a technical breakdown, a major technical breakdown would be the breakdown of the support line over here. And then I have this one over here as a warning sign. This little, look, how's that for a flow? This trend line over here, a breakdown over there, that would, in my mind, set up most likely a test of that important critical line of support. So you could see I'm always looking for where the risk comes in, always watching our downside. And we've been able to obviously continue to take advantage of the move, not only on the downsides, but now also on the upside. We have coming above us resistance. So first is the risk of where we see a technical breakdown, as we are now positioned overall with a buy side bias. Where does this break down? And we see above us, we also have resistance, overhead resistance horizontally coming off over here, where price was able to establish a support area before breaking down and crumbling down to new lows. And then we also have this trend line that's coming in around 28,000. We want to watch that area if price is able to test it in the days or weeks ahead. I think that it's pretty important to see what happens after Wednesday, the market's reaction to whatever numbers comes in. If the markets are not able to hold somewhere above this yellow line over here, that would be a signal that we are probably and or most likely getting ready to roll over. The market might be forward looking. Well, what's the next month from now? What's that going to look like? We see a lot of the causations coming off a little bit. We saw energy making new all-time highs. That's something that I believe that the Fed would have to really take a further aggressive stance. And that's something that is a risk out there going forward that we need to watch and be aware of. Let's just take a quick look around and see what's going on. I'm going to jump back over here in 1 minute. But first, I want to view the market over here using our preferred equity settings or stock settings. Well, it's very safe, but you see that we've turned positive over here, right? A lot of people still not really believing that this rally is going to go much further. Maybe they're right, maybe they're wrong. I really don't know, but it is significant. Remember that March low, that important video we talked about at the time? You could see if you look horizontally, we have traded back above that area. And not only that, are beginning to confirm that as support. You could get a very good look at that right over here. Since I've left away 2 weeks ago, none of this has been touched. It's where we've been. You can see the breakout above that area of resistance and then confirming it into support. And right now, that's where we are. A breakdown below this area, and we might have to readjust this line right now as the market is showing us in real time. It is paying attention a little bit lower. Let me just go ahead and do that with you all. Here we go. Move that down to right there where that last low was. It's going to leave it over there. So trading below this area, that would say that this rally is beginning to roll over. And we're going to draw in that trend line over here right now. You can see the confluence of them coming in right around that same area, 12,800. That's the area to watch. We did, as we believed would be the next target, reach this area of 13,000 on the NASDAQ. When I say our next target, that's which if we had that bullish breakout, which we did. S&P 500, remember, I'm coming in cold here, everyone. It's been 2 weeks. So I'm going to get it back. We're going to get into that flow. In just a moment, I'm going to come back in and check in with all of you and all the comments. I just want to get a look here at the NASDAQ, at the S&P 500, and then take a look at our levels as well. As we can see that we are now have some buy-side bullish momentum taking place. And we could see also the S&P 500, one trend line break, two trend line breaks, and now taking out that horizontal resistance and confirming that into support. Just a little note here for me from a repair perspective, S&P 500 is actually looking a little bit stronger than the NASDAQ. That's something of note, of a little bit weird. I don't know what to make of it. I'm just pointing it out. And over here, this could change very quickly. We just need to make one last adjustment over here. And it's going to be on this, bringing down, just as we did on the NASDAQ, bringing that down a little bit lower. And that's the area that we're going to try and hold as support, breaking down below that. And then all of a sudden, we could be looking for a pretty big move rolling over towards 3,900. All right, everyone. Until tomorrow.